In one sense, obviously, this is a watershed moment for the UK. Inflation down after that period, and this is just the rate at which prices are rising each year. After that period of the cost of living crisis where it was in double-digit levels, down now to 2%. That's the Bank of England's target. It's where it wants it to be. But does that mean that it's actually going to start cutting interest rates? A lot of people think yes, because things are back to normal. But when you dig into the numbers, it's a little bit more complicated because it's not just about the overall inflation, it's also about different parts of the basket of goods and services we're talking about. And specifically, if you look at service price inflation, OK, again, the annual rate at which it's changing, that's still up at 5.7%. That's higher than the Bank of England would like, actually a bit higher than expected. And the upshot of that is, if you look at what people are expecting in markets, OK, this is what people are betting on for the August level of interest rates in markets. And you can see this is just the last few days. There was when the inflation figures came out. If expectations would go up, in other words, that they think there's a lower probability of a hike, of a cut, then that would go up. And that's exactly what happened. So actually, expectations for an interest rate cut in August have gone down. The expected rate in August is higher, 40% chance of a cut in August now. It's worth saying, though, in this question of whether things are back to normal, it kind of depends on how you look at it. This is the rate at which inflation is changing, OK? So annual inflation. But if we take the same data and just look at the level rather than the rate at which it's changing, so same data, same period, you can see, look, gradual increases in prices, OK, cumulatively. There's the cost of living crisis, and there's where we are at the moment. And when you're talking about inflation, it's just the annual change. It's the difference between that and that. And that does indeed come out as 2%. But for a lot of people, what really matters is the difference between that and where we were before the cost of living crisis, and that is a lot bigger. It's just over 20%, actually, in terms of that change. And that's what a lot of people are feeling. The cost of living crisis is still there. The good news is earnings are climbing as well, although they are still a little bit shy of where those prices are.